what would you say are the different consumer habits in between LATAM and the US themselves?
Now more people have access to buy online.
Right, like how did you leverage customers, right, or companies, right, and customers, people or companies kind of feedback?
It's key. Talent is what builds a company, and making sure that you can scale with the right people, I think, is a big part of the process.
Welcome back, everyone. Connecting the dots in fintech here. New episode, the US versus LATAM and the differences in between the two payment landscapes, talking about checkout, frauds, and everything that touches on new languages. So stay tuned, a lot to discuss here. Well, hello. Hey, Chema. It's good to have you. Founder of Deuna, I think Latin American one-click checkout, but so much more. And I think we'll touch on this. Founded in 2020. It's good to have you, man.
No, thank you. Thank you for having me. And also the weather is amazing. So what a lovely day today. And thank you to be here.
That's Miami for you, right? No, so like again, extremely happy to have you. You know, from Silicon Valley to the different Latin markets, you have like an insane journey. So we'll touch on the U.S. market versus Latin American markets, right? On the payments front, we'll touch on the lesson learned. We'll touch on product market fit journey and a lot more. But maybe before we start, right, like having a better understanding of who you are, of your journey and the UNA, what you guys do. So like giving you the mic, as you can see, and let's start there.
Amazing. Yes, like you mentioned, it has been a crazy journey. Happy to dive more into the conversation with you and learn more about payments. Well, we started the company after 2020 while we were working with Roberto in Stanford. So we saw that there was a big gap, especially in LATAM at the moment, right during COVID, that enterprises had to go and innovate online. A lot of enterprises didn't have a direct-to-consumer channel, believe it or not. So there was a big necessity. On top of that, a lot of fragmentation. The acceptance rate in Latin America, it's very, very low. Yeah. 1 out of 3 payments were being declined. So we saw that there was a massive gap that we had to cover there. And since then, we have grown significantly. Now we're globally. So we started as a checkout and infrastructure slash orchestration company, and now moving into AI. So we're happy to dive into that.
No, the journey is pretty incredible, right? Like obviously Stanford's, McKinsey and Carlyle, if I'm not mistaken. Like, how did you shape your fintech approach?
Well, to be honest, living in Latin America, you feel the pain points actually as being a consumer there. So while I was working also like at KFC, I saw there was a big gap. Yes, I did Carlyle. That was more of the financial and analysis part. I wasn't. I saw myself there and as a short-term career. So I was like, okay, I need to go into more of the operational side. And then we started a company with Roberto right during COVID. And yeah, we saw the gap. We saw the gap where we're seeing that a lot of payments were always being declined. During COVID, while I was working at KFC, 80% of the sales dropped. So when the sales dropped, we saw that we had to actually go and solve that issue. And with Roberto, the perfect co-founder for me and partner, he being an expert after McKinsey, working on payments directly himself, we saw that we had to go and solve that issue. And yeah, initially was mainly around the conversion part that we're trying to optimize, giving that seamless one-click checkout experience. With checkout, right? It's all about the user experience that needs to be fast, easy. The user, after all the aggregators that have come on board, have definitely encouraged to follow the experience for the consumer to be very, very like frictionless. When you're trying to build a direct-to-consumer channel back in the day, 5 years ago, for enterprises, there was a lacking experience there. You had to go through all the registration process. But even if the merchant and the customer solved that problem, then there was a bigger issue. All the payments were being declined. Not all of them, but 1 out of 3 payments were being declined. So we're okay. If we're helping the user have a good experience, then we need to go and actually fix the payments problem that was actually happening behind the scenes, that nobody was seeing that at the moment.
No, that's extremely interesting, right? I think in terms of facts, you just mentioned that 50% of payments tend to be declined. and you started touching on the first point, which was customer experience, and then you moved into kind of, well, customer experience is great, but at the end of the day, if the payment doesn't get processed, and that's something that, you know, when you live in Latin America, you have to experience a lot more than the US, for example. So I think that's a massive contrast. But, you know, how did you guys ultimately get to product market fit? Right? Like, what was the journey to kind of get there? Because you just said, right, like you started experience focused and then you went into acceptance conversion. How did that get shape? And maybe a better question as well would be, um, are you ever fully at product market fit as a company? Because you always have to evolve.
I mean, I think that's a great question. Um, I'll break it down in two parts. The first one is you always need to listen to the customer. Customers are key and see what is actually their main problem that it's top of mind. We had an idea at the beginning, right? The idea of that the seamlessness, that the one-click checkout experience was a key component. When we were like talking with our customers, they were like, "Yes, I see that point, but actually I have another pain point that I'm trying to solve. My payments are being declined. Can you help me with this?" And checkouts, to be honest, they look easy on the
Yeah, they do.
like when especially as a customer, but like there's a nightmare to have a good checkout. It's very expensive. You need to do multiple integrations to scale globally. You need to do payments that are localized. Each integration takes between 2 and 4 weeks at least to integrate. That's time and money. And enterprise.
That's quick, actually. 2 to 4 weeks. Like, I haven't heard that many companies say, yeah, 2 to 4 weeks.
Well, yeah,
Usually it's a couple months.
a couple of weeks, at least 8 weeks. But yeah,
crazy.
at Deuna we tried to do things fast, so that was I was saying 2 to 4 weeks. But yes, I mean, and that's even one issue, right? Then imagine you're scaling globally. You need to be operating in 13 countries. That's only 13 integrations right there. APMs are very localized.
Yeah.
So when we're seeing these huge problems that we're talking with our customers, we quickly realized that it wasn't just a checkout that we had to solve. Then integrate a whole payment ecosystem, and that's when we started building all the infrastructure that we have built into today. Now, PMF, you're always going to be innovating. It's being always hearing to your customer what's actually even more top of mind to them. So I think that's the great part of innovation, and the company is always going to be evolving.
Yeah, PMF is product market fit for the ones that, you know, in those acronyms sometimes they catch us. I think, you know, talking about this, did you guys ever leverage kind of customer feedback? Right. I sense there was a little bit in the story, a little bit of a pivot, which I think is normal in startups. So like two things that come to mind, right? Like, how did you leverage the customers, right, or companies, right, the end customers, people or companies kind of feedback to shape, you know, like how you guys have been evolving now for the past 5 years?
No, perfect. As a founder, it's part of the role. It's part of the role. It's hard. There's a lot of it's not easy, right? Out of 10 days, 9 days can be very hard for you. But that one day that you actually found this an amazing client, or found this amazing hack with the team with this product, feature that we're trying to point out, it's part of it. So yes, we saw that we had this idea here, but then we saw there was a bigger gap here, and we had to make that decision, and we did it, and it turns out to be one of the best decisions we have done so far. Since then, we grew from 1% to more than 27% of all the digital economy in Mexico. So it's been quite of a story.
That stat, I've heard it like a couple times, like 1 to 27% of the entire flow of funds in Mexico in this case. Like it's astonishing. So like, congrats guys on this. And I guess second thing for me, right, which I touched on, is as you pivot, right, and you're in Latin America as well, right? I think when you're in the Silicon Valley, it's a very different story. But what about raising money, right? How was that? Because if I'm not mistaken, you guys raised 37 million, right, in Mexico, in I believe, or
No, all our investors are actually all US based. So
Okay.
yeah, raised off round right after finishing Stanford when Roberto was finishing that. It was one of the biggest Series A in Latin America.
okay,
Um, but actually we would always had this global focus. So when you're speaking with investors, I think the main part is see the customer traction that you're having.
Yeah.
By then we had signed so many clients, they were seeing the product growing so fast, and then the retention with all our customers at the end of the day, that's key. And having happy customers, it's the best feedback that you can actually have. The happy customers, it's always our essence, and it's part of our culture. So we are very customer centric, and I think that was a big part. And then that's what investors saw. And then the vision, of course, we're always thinking 5 years from now, and actually we can even drive more into that with AI. That I think is something very interesting of what's actually happening with payments.
I think hold that thought. We'll touch on that in a second. But yeah, like you're 25, 26, 27, whatever age, and you raised such a big round right outside of school. That feeling must have been pretty nice.
Actually,
Okay.
came with a big responsibility. Like when, yeah, we raised it when we were 25 years old, 20, 24, 25 years old, I don't recall it. I mean, like, it wasn't about the number. It was okay. Now, the more you raise, it's the bigger responsibility, and that's basically it. So, it was okay. How can I actually now go and grow this, grow the team, and make what we're trying to vision happening, and put all our hands on deck to go put all the hard work. And since then, we haven't stopped. 20, 13, 14 hours a day nonstop. The good thing, that's compounding, and that compounding of time with the amazing talent that we have, we make sure that we brought the best actually leaders on each area on the team, has make everything at Deuna at scale so fast, and then build an amazing product that now is serving all the top enterprise of the region and globally as well.
Actually, and it's a perfect segue, because I think one of the topics of today is touching on the differences between LATAM and the US landscape when it comes to payments, right? And you've lived in Latin America as a customer. You've lived in the US as well right now because you're in New York. There must be an insane difference, right, in terms of landscape. And so, like, maybe my question to you is, what are those differences? What would you say is completely like worlds apart, right?
I like that question a lot. Payments in TAM is very hard. It's very complex. And then I will not touch more on what are the pain points that I'm seeing in the US and globally as well. But like if you want to focus specifically on that TAM, I'll say there's three main challenges. The first one is the lack of acceptance. Believe it or not, nowadays, even nowadays, when a lot of the transactions are credit card based in the US, in LATAM, the credit card transactions are declined, right? And being a merchant, you're trying to grow your online business and seeing a 33% decline rate, it's insane. And that's something that you had to fix it. You don't see that in the US. The second point is there's a lot of fraud. And fraud makes actually contributes to also those soft declines that is generated because you need to close and be more rigid on your rules, which can tend to then generate soft declines that then you need to try to fix that. Okay, so they go hand in hand. And the third part is the fragmentation. So because you have a high-end bank population, that fragmentation is a perfect scenario to have a lot of APMs. And APMs is all these wallets, what we saw with Pix in Brazil, right? That adoption rate. Then you have Spay, PSE, Neki, DaviPlata, all those different wallets that have come on the market they're solving that pain point. The good thing is because of these APMs, now more people have access to buy online. So the share actually of the wallets and the checkout has increased. But yeah, that was something that we're looking to solve. Now, in the US, the problem is different. Acceptance is solved, okay? Orchestration, you see enterprises that need orchestration.
Yeah.
I mean, I think nowadays, everyone needs an orchestrator, whether you build it in-house or you're gonna use it an external orchestrator. In the US, you see a mix. Enterprises that already did that 7 or maybe 8 years ago or 5 years ago, and then enterprises are doing that nowadays. Now, The problem is not acceptance, it's scalability. It's scaling, having a global footprint, right? And being able to then serve the customer with a preferred payment method. It's not a lot about acceptance and redundancy. It's more than about having the right connection, the right payment method, optimize the cost, and be able to have a global footprint.
I think this, first of all, like, let's talk about wallets. I was in Peru not too long ago, and I mean, first of all, insane. But the thing that was really interesting is the evolution and disruption that Yape is having. And you were talking about it. Digital wallets are definitely a payment methods to watch. But you touched on a different thing. Now let's look at the US for a second, which is, the complexity of acceptance is not the biggest problem. It's not number one. Like, everyone still wants to go, like, to 100%. That's the goal. Do you get there? Complicated. Why? Because you have to leverage both fraud and everything else, right? So, like, not every payment should be accepted. So, like, having 100% acceptance rate is complicated. But an orchestration to me means not an orchestrator. An orchestration means that you're able to have flexibility in your payment stack and actually route transactions, leverage different companies with scalability, which you mentioned. I was doing an analysis of Europe versus Latin America versus MENA versus the US. And yeah, the US is a lot more, like, payments are a lot more of a commodity. And so there's maybe a little bit less of a need to process payments in the US. But some large organizations have global, right, initiatives. And so, like, they have customers paying from right and left. And so when you think about it, those do need, right, that type of orchestrator in this case that can come in and help make sure that they have the right payment methods in the different regions and are increasing acceptance there. Perfect segue once again, because we talked about the different payment methods, but that touches on consumers, right? What would you say are the different consumer habits in between LATAM and the US themselves?
Okay, consumer habits, I think they can be very similar.
Okay.
I mean, one of the things that I've realized, and you can see in LATAM, in MEA, Europe, and also in the US, it's a consumer is very sticky with their preferred payment method. Okay, they tend to always try to come back to the payment method they always use. So that's why having different and a lot of the options on your checkout drives that conversion. So whatever X payment method the user wants to actually use, then he can actually process or checkout with, right? Now, the big difference is what pain points you're trying to solve on that region. In the US, what you mentioned, right? You have more the idea of scalability and the global reach. In LATAM, what we saw initially was, okay, fixing that high decline rates that enterprise were having. Now, the solution can be the same because you need the orchestrator to do that. Now, in our idea, in our vision here, it's okay, what can you do then with the data to then give more value to the merchant itself? Because I think that's a lot of the key component that any payments company is actually right now probably thinking.
No, I agree with this, and I think we'll touch on data a tiny bit later. But a question for you, which is more, what was easier, to launch in the US or to launch in Latin America? Not gonna set up a little bit more context, not just in general, but like, you look at product, for example, and product itself, right, might be a lot easier in the US rather than Latin America. But then you look at, finding the right customers, and because there's a bigger gap, then it might be easier actually to do it in Latin America. So what have you seen kind of as the different challenges as well as pushes that have helped you kind of launch, and which one would you say is hardest?
Amazing. I actually want to tell you a story on that end. So, I mean, at the beginning, we were bootstrapping me and Roberto, right? Like paying all our salaries up with ourselves, like hiring the team and everything out of pocket. It was very, very hard. So when we closed our seat, I told Roberto, like, hey, bro, finally we have some money to then pay like everyone, because everyone was putting their heart into the company. giving everything that we could. But then the problem has just become bigger because the objective is higher. The bar goes higher, and that goes year by year. So I don't think it's anything's easier than the other. You just learn more through the year. So maybe you are more used to some issues or problems you're going to encounter. But then every year the bar is going higher. Competition is going to be higher. So I think it's more about how you're managing the journey and learning what are the key pain points on that market and adapting to it. So I don't know. I don't think it's a question you're or the answer you're expected to be answered, but
Sometimes it's not.
yeah, it's part of the process. It's part of the process, and to be honest, it's about finding the right pain point they're trying to solve on that region itself, and both can be very difficult.
Yeah, I think what I'm hearing, and there's no right or wrong answer, but what I'm hearing is the problems that you're facing evolve and you deal with them differently also based on what you've already dealt with, which is experience. Um, awesome. One more question on the differences between US and LATAM. Any country-specific challenges that you faced in Latin America? Is there one specifically that you would say would be because of financial inclusion, Argentina, or is there one country that you would say this is a country that you should watch out for, mainly for the audience to have kind of that knowledge that they may not have today?
I would say it depends on the strategy. I think the market itself in Latam it's very similar. You're gonna have that very localized payment methods, those wallets. Each wallet's gonna be different by country. On some countries, you're gonna have more fraud than others, and that's part of the management. I would say Mexico tends to be with more fraud, in Brazil as well, but also because those are the two biggest markets of the region. So it's just have a good strategy on how you wanna enable those markets. Make sure that you have the right partners, have a good fraud provider, have a good gateway or acquirer, and then scale from that.
Okay. And when you look at
My advice to clients.
your advice to clients, that's a good one. That makes total sense. I think I have seen it, right? Like, for example, you look at markets and like you look at Brazil, as you said, and Pix, for example, Pix Automático is coming up and things like this. Are there specific industries that you think are easiest for you to work with today?
That's a good one. We started actually with the QSRs, and then we scaled quickly with retailers and airlines. Each and that was part of the process. Like, oh yeah, the checkout is easy, but actually each industry has a complete different checkout, which is a complete different product logic. And thank God we have an amazing CTO and our CPO there who has been able to manage all of these complexities and make that product so scalable and modular. But I would say at the end of the day, it depends on the strategy you're trying to push for. Yeah.
Okay. Let's move on. Next is on the agenda for today is, for people, and I always find this one super interesting personally, which is, a lot of people see the successes. They don't see the learnings. They don't see the challenges. And so like, I think I consider you first as a friend, but more than just a friend, like also someone that I highly respect because of what you've dealt with, where you come from, what you've done with it. And so I think, looking at hurdles, takeaways, and how you have been building in emerging markets is super interesting. So what were some of the kind of biggest scaling issues that you've faced? And not just, because you're building a payments company, but just in general, right? Like building a company, what are some of the biggest scaling issues? Is it hiring in different regions? Is it solving different problems? Is it having the right vision? Is it pivoting? What are them?
I like the question. I think the challenge that you face are always going to be hard, right? The important is how you start learning from it. And I think one of the values that we have at Deuna, it's being always never take no for an answer. Okay, so making sure that you're always pushing that extra mile, and that happens from you want to have the best team. You're gonna have a lot of no's, but then a lot of those no's, you need to make sure you can convince them to be a yes, and be able to make sure that that person goes and trusts you to then go build something very interesting. And I think that was the first part of the process. And then we had to go and educate the whole market at the beginning. Nobody had an idea of what's orchestration in LATAM. Now, yes, it's a buzzword, but during that time, nobody had an idea. And now what we're doing with AI, nobody has an idea of how you're leveraging that AI part with payments. And that's part of the education that you need to have on the market. And then you need to be comfortable with those no's. I think that's part of a founder journey, and then of building a startup. Then making sure that those no's become yeses, and then those yeses that people have an amazing experience on it. That the team that you're working with, they're very passionate with what they're building, so they can go and say, hey, I'm very excited about what we're building here at Deuna. And then with clients, have very happy clients who can actually speak amazing things about yourself, about the company and the product that we have, right? And I think that combination has allowed us to grow a lot. And yes, at the beginning, it's hard. Out of 10 days, no, 9 are going to be very, very hard. But then you just need one day that's going to be making the difference. So
I think we come back to exactly what I was saying. You see the successes, you don't see the hurdles. Coming back to payments very quickly, out of acceptance, conversion, and fraud, and it's a rapid fire question, which one was the toughest to solve and show for it?
well, that's a question that we might need to ask Roberto, my co-founder, who I usually I take those problems and deal with Roberto, and then Roberto goes and solves that. But right now, one of the challenges that we're facing right now a lot is, I think, the magnitude of what we are growing. So the magnitude at the scale we're growing. So making sure that we can scale at the momentum, and making sure that we can develop at the speed and hiring, because it's hard to hire good talent at the right time, at the right moment. From one day to another, you need to grow 3x in talent, making sure that you have the right interview process. That has been a quite learning experience. Thank God we have an amazing head of people who has been able to put those processes in place, but that's hard. And then, I try to make the analogy with football or slash soccer. Um, Sometimes you have players who can take some time to go and adapt, but then sometimes you need to have a killer goal striker that who needs to go and scores all the goals. It's a process, and when you're bringing a lot of talent and all of those everyone needs to be a great striker. It's hard to find really good strikers. Look what Meta is doing right now with AI. It's insane what they're trying to do, like $100 million offers, like, and even with that, they're trying to compete in the market. So talent is key. Talent is what builds a company, and making sure that you can scale with the right people, I think, is a big part of the process.
I can tell you firsthand, talent is probably the hardest thing. I think you can think on your feet, you can reiterate fast. There are many things that you can learn, but I think I saw an interview of Sam Altman, and he was saying, within his journey, one of the things is within 10 minutes, he can recognize whether someone is going to be intellectually driven or whichever it is. And I think that's a major skill, because like you can get major setbacks by actually not hiring the right talent. Perfect kind of segue once again, but like any key learnings that LATAM founders and entrepreneurs should know, that US EU peers maybe take for granted?
I'll say more than Latin founders, any founder. I'll say any founder, especially for us that work here also in the US, fail fast but forward. That's key. Be able to adapt to a market fast, make those can be a hard decision, but when you commit to a decision, make sure you push through. So I think that's very important, and always be attentive of innovation. Making sure you are very close to your customer. The product team needs to be very close to the merchant, to the enterprise, or to the customer if you're selling to a user, and making sure they're understanding what or she need, and make sure that then your product is satisfying those needs, right? Then it's about scaling.
I think the first one is very much Bezos like, which is, okay, let's make a decision, let's get it done, and then if we fail, we'll just come back and do something. But you learn faster by making decisions than thinking about something and not moving. So
And there's no perfect decision,
No.
There's just make sure that you try to mark your own journey and make sure that you're pushing always forward.
I'd say Deuna is quite successful as a company. When you guys are tracking, obviously, metrics to kind of prove that, what are some of the metrics that you're currently tracking from a because we usually tend to look at merchants and we look at their metrics, and so like we try to accommodate them to show that we're good at something, like vendors in general. But I wonder, like on the vendor side, right? Like as an orchestration or even other lines of businesses that you guys have. What are some of the metrics that you guys are looking at to kind of make sure the company stays on track and stays successful?
So I would say three parts. The first one is growth. That's a key part. So how much we're growing every month and going from 1% to more than 27%. I think that was key
In revenue or profit or?
in processing volume. So for us is volume that's key. Then I would say NPS of how happy the customer is, how make sure we're retaining, and then believe it or not, we also track a lot how productive we are within engineering. We deploy so many efforts around integrations to make sure that that efficiency ratio that we have and that quality that we're deploying, it's very essential for us.
I think those are pretty good in general. I think I read that TechCrunch said that Deuna got 3x better conversion, I think in Latin America specifically. How did you guys achieve that?
That was an interesting part because we realized there was a high when we were seeing the checkout. We saw that registered users had a double conversion rate than guest users. So by seeing that KPI, we were able to deal with where right now we have the biggest user network in LATAM and make sure that that KPI was being achieved. So it was something that actually Roberto realized while we were like looking at the data, and then with that we leveraged it, and then when the checkout started scaling back in the day.
Well, this was absolutely fabulous. I have really much enjoyed this. Ultimately, we've touched on, to recap a little bit for the audience, but we've touched on LATAM versus the US, right? The different payments landscapes. We've touched on the journey of Deuna and what a journey it is. In 5 years, you guys have achieved some things that a lot of companies never do, and with remaining also very humble. So incredible there and your journey to product market fit. And then obviously kind of, regional insights, flexibility, and how you guys have scaled. Before we wrap up today, what's kind of next for Deuna? Any big launches or plans coming out soon?
So actually, especially here in Miami, we have Payment Leader Summit, and we'll be actually speaking about our big launch of Athia, and that's where innovation came about, right? We were already handling all the transactions and all the checkout and processing all the volume, and we realized that data right now for AI is key, right? And actually, 80% of the projects for enterprise in AI are failing. Why? It's very expensive, and second of all, it's actually difficult to give a reasoning engine and allow you to bring decisions on top of it. And that's where Athia came into place, and very happy to now start launching that and growing with partners here in the US. But yeah,
It's almost like an AI, like an operator for payments specifically.
more than operator itself, it's when you look about payment data, it's the most rich data you can actually have, right? And if you look at the priorities of a business, if you're the CEO of the company, it's okay. What does my customer want? What his or her preferences? And you can leverage AI through the checkout data to understand that. Then understand what are the opportunities. Where can I increase my revenue, drive more conversion, reduce my processing costs, or find those revenue leak opportunities? All that data, it's there, but enterprises are not leveraging it. So that's where Athia is coming about, to be able to give you those proactive insights and what is your customer actually preferring. So then the market team can actually go and develop a product mix for that. And the conversion, how can I actually start driving more conversion, right? Making sure that maybe you can enable the correct preferred payment method, and find those revenue leak opportunities if someone it's actually getting churn on the checkout. So be able to synthesize all of that into a reasoning engine that can proactively give you those insights, and then even better take action for you. That's when you actually start scaling, and that's the whole idea of the product.
Well, I can't wait to hear more about it at PLS. I think I've been lucky. I've actually seen it in action before, and it's pretty cool. So if you get a chance to try it, and hopefully they build a demo that you can try it on, I encourage the audience to actually go check it out. Look, it's been a pleasure, Chema. Love hearing your story from abandoned, carts to improving the entire e-commerce of LATAM. Well done there. Thanks for joining us. And to the audience, well, I hope that you learned as much as I did today. Obviously, there is a lot happening, and we have a lot more episodes coming. But Chema, any last words?
No, thank you. Thank you for having me, and hope to see you in PLS.
I'll see you there.
Perfect. Bye.